The strategic choices businesses make about potentially harmful chemicals in their products can have major financial consequences for companies and their investors. Toxic risk can hurt financially. But moving to so-called green chemistry can present significant business opportunities.
Investors that aren't paying attention to environmental factors, they tend to sort of come up like earthquakes. They're big surprises, big jolts.
We often think that our homes are safe refuges for our children. In fact, there are many chemicals found in common household products that turn out to be developmental toxicants.
We're very interested to know whether the companies that we invest in are managing the risks that they face in their marketplace.
One of the chemicals that we're concerned with, for example, are phthalates, which are used to soften vinyl. Those will be found in children's toys and shower curtains, on our kitchen floors and wallpaper.
They face financial risk through liabilities or damaged reputation or market exclusion.
Bisphenol A, which is used as a plasticizer in polycarbonate plastic, also commonly found in the kitchen in the form of infant baby bottles and water bottles that we might take out on a bike trip.
Another chemical of concern, PFOA, is contained in stain-resistant carpets, microwave popcorn wrappers, and various other products. Testing on animals reveals a wide array of health endpoints of concern, such as the liver and kidney, and prenatal and reproductive development. In April 2006, the Securities and Exchange Commission wrote to DuPont to urge it to do a more balanced job of disclosing the emerging scientific and financial risks associated with PFOA. However, a newly released report by DuPont shareholders indicates that the company is still failing to disclose important emerging scientific, marketplace, and regulatory developments.
I believe that corporations behave very badly when they fail to disclose what are the impacts of their own functioning.
Another chemical would be the brominated flame retardants. These are used in our computer screens and our television sets and our mattresses, draperies and things like this. So very common products that seem to be benign and friendly, like the curtains and our beds.
And by the time that disaster happens and you hear about it, it's too late to get out of the stock. You've taken the bath as an investor.
And so if you're a chemicals company, if you are not ahead of the game, the regulatory game in terms of managing those risks, and we know that Europe is increasingly at the legal level but also at the societal level becoming concerned about pollution, we know that those companies are going to face risks which perhaps a well-managed company won't.
In the last 5 years, the European Union has become far more active than the U.S. in regulating toxic chemicals in products. The European Cosmetics Directive lists chemicals that are known or suspected to cause cancer, mutations, or reproductive problems, and prohibits them from cosmetics or personal care products. Europe's Restriction of Hazardous Substances Directive lists 6 classes of chemicals banned in electronics products, such as lead, mercury, and cadmium.
And so if, for example, American companies want to sell into the European Union, and that's a population of 475 million people, then they need to meet the European standards.
Then there's yet another European directive, the most sweeping yet, known as REACH. As Heather Langsner, analyst for Innovest Strategic Value Advisors, describes it in a recent report, it represents
a much more rigorous form of chemicals regulation than has ever been established in any market before. You could be looking at chemicals that were considered a critical component for a certain production process being suddenly removed from the supply chain.
With new laws like REACH, information on toxics in products will become more available than ever before on both sides of the Atlantic.
There'll be much greater access to publicly available information about the chemicals because of REACH.
Sony had a bad experience in the Netherlands. I think it was 2000, 2001. Dutch authorities prevented them from selling PlayStations in the Netherlands at the Christmas season because, unbeknownst to Sony, the connecting cords in the PlayStations had cadmium at levels that were illegal in the Netherlands. So Sony got blindsided. It cost them maybe $150 million to deal with this. But as a result of that episode, they adopted a corporate safer chemicals policy. And what they do is they produce lists of chemicals that they don't want to see in their products or that they're going to work to reduce. They tell their suppliers that this is the case, and they actually certify their suppliers.
Although the highly regulated consumer product markets of Europe present risks to companies and their investors, the relatively unregulated markets of Asia also present companies with risk.
Your average consumer in Beijing, in Shanghai, in Guangzhou, in Nanjing, in Chengdu, they want exactly the same things that someone sitting in Amherst, in Cleveland, in San Francisco wants. And in many instances, they know exactly what the issue is. And the key characteristic that a Chinese consumer brings to it is a lot less trust. One of the things that happens in countries where you don't have a tested or consistent regulatory process is that you have regulation through scandal. Procter & Gamble owns a brand called SK-II, which is a Japanese cosmetics brand. They were distributing a product in China, and a real controversy developed that perhaps the product was unsafe. It was causing rashes. I think it was a moisturizing product. And it was very interesting, not because it was such a horrendous scandal, because it's not clear to me that it was, but it was very interesting for what it told us about consumers in China, the ability of the government to even understand what the problem was, and the ability of Procter & Gamble to figure out what to do. So the product appeared to have a problem. The Chinese government, when there is a product problem, especially related to a company, and we heard this in Korea and in Japan, Asian governments do not step in proactively and say, no, this product actually meets our standards and we've tested it and it's safe. The last thing these governments are going to do is to stand up and defend a company. Because in many instances, they don't have a clear mechanism to be able to prove that they've tested the product or they know what's being distributed. So the government, even if they have standards, steps back. China is absolutely the wrong place to take a substandard product.
While fiduciary duties can vary from state to state, one thing that is true everywhere is that when there is evidence that the use of a particular chemical may have a significant impact on the value of a company, it must be a part of a fiduciary's decisions regarding the investment.
Safer chemicals and safer products ought to be a high priority for pension funds.
Fiduciaries are in a tough role. When you ask what's the appropriate response to an event, whether it's a precipitous decline in a stock price as a result of, whether it's an environmental issue, a social issue, a good governance issue, there is clearly a responsibility on the part of the fiduciary to act, because the fiduciary needs to be knowledgeable of those things that are occurring in the portfolio that are impactful to those that they represent.
I'm not convinced that just divesting out of that sector really accomplishes anything, and that we can have more ability to influence the management by being part owners and holding them responsible.
Concerned investors have formed an organization, the Investor Environmental Health Network.
Investors have started sending letters to boards of directors of companies asking, does our company have a safer chemicals policy? Do we know what chemicals are in our products? Sometimes companies are forthcoming with answers. In other cases, companies are not very responsive, and the shareholders feel obliged to file a shareholder resolution in an attempt to get answers from the company.
Because we're a shareholder in Whole Foods or in Johnson & Johnson or in CDS. I mean, those are all companies that we have been involved with through shareholder resolutions and dialogue. Because we own the companies, we believe that such companies need to take steps to address those growing concerns.
The investment marketplace suffers from a dearth of information about whether products sold by companies are affected by toxicity concerns. A number of shareholder resolutions are seeking to fill that gap. A 2007 resolution asked Bed Bath & Beyond to report on concerns related to PBC, PFOA, and cosmetics affecting products sold in the company's stores. Dow Chemical faces a resolution asking which of its chemicals are known to cause or exacerbate asthma.
So what we're trying to do in the Investor Environmental Health Network in Calvert with our environmental analysis and screening is to try to recognize some of those unrecognized risks and opportunities early and make our investment decisions based on that so that we don't get surprised.
So my own view is that the best thing to do is to tell people what's going on and then to hold yourself ready to adapt to the circumstances.
Another set of resolutions goes further, to ask companies to assess their options to eliminate problem chemicals. For example, a 2007 resolution at Apple asked the company to come up with a report about placing PVC and brominated flame retardants on a rapid phase-out timeline. A resolution at DuPont asked the company to come up with a report about expedited phase-out for PFOA. Though DuPont says it will eliminate this chemical by 2015, shareholders are concerned that consumers and regulators may demand change more quickly, jeopardizing up to $1 billion worth of DuPont's annual business.
I happen to be a technological optimist. To me, the Luddites are the people who defend the old brown chemical technologies of the 20th century, of the 1900s. We're now in the 21st century, and the chemistry that we need for this century is the green chemistry.
Green chemistry is the science of how to make materials that society depends on in an environmentally responsible way. That's basically what it is how do you make a molecule and have that molecule do all the things you want it to do and not hurt the environment. Big companies, small companies, mid-sized companies, at every level, small companies can use the green chemistry as their competitive advantage. They can say that we're coming onto the marketplace with a new paradigm, we've got something that's different. The mid-sized companies can use it to deal with environmental regulations, environmental compliance, and the large companies can use it to secure market share.
SC Johnson has this program called Green List, where they're systematically reducing the toxicity of the chemicals in their products. And they worked on reformulating Windex, and they reduced or eliminated various toxic chemicals, and in the process of doing that, they increased the cleaning power of the product 30%. And shortly after they put the reformulated product on the marketplace, they increased sales and they increased market share.
Cosmetic product that is sitting on the shelf, we have all these additives to prevent it from precipitating. If we can understand how natural systems support what I'll call shelf life, and we can introduce those kinds of technologies into manufactured processes, then we can, instead of using harmful additives, we can use very safe natural additives to achieve those same kind of shelf life performance issues.
Walmart, a market giant, is playing a surprising role in driving demand for safer products.
You know, Walmart is so big, the suppliers are going to have to pay serious attention to this.
Walmart has created a chemical screening policy for its suppliers that will essentially drive down the price of products that were formerly considered niche products.
And they've basically said they're going to name 20 priority chemicals over the first 2 years of the policy, and they've already named 3. They've named 2 pesticides, propoxur and permethrin, and nonylphenol ethoxylates, which are chemicals which go into detergents. What Walmart is saying is what's safe enough for the U.S. government is not safe enough for Walmart and its customers. And said to its suppliers, we want to get out of propoxur, we want to get out of permethrin. And permethrin in particular is a very big deal because it's the major insecticide that's used in a very, very wide range of consumer pesticide products. And Walmart has said basically, no, we need something that's less hazardous. Participants in the Investor Environmental Health Network raised the PVC packaging issue with Shearing Plow. Shearing Plow sells Dr. Scholl's products. And Shearing Plow told the investors that they were moving out of PVC packaging for Dr. Scholl's products as a result of Walmart's packaging initiatives.
The Campaign for Safe Cosmetics has run advertisements in the New York Times and has persuaded over 550 companies to sign their Compact for Safe Cosmetics.
By safe, what we mean is that they contain none of the ingredients that were banned by the scientists in the EU. But in many ways, we've actually gone beyond that because we adopted the precautionary principle and eliminated parabens.
The precautionary principle is just a kind of a fancy way of saying better safe than sorry. What it really means is that when a situation looks inherently dangerous, we take action when we have evidence of harm, and we don't wait for proof of harm to be the trigger for action.
Even though parabens were not included in the EU directive list of banned substances, we took the precautionary principle in eliminating parabens because we had seen enough research and enough information to indicate to us that parabens, although they are the most widely used preservative, are endocrine disruptors.
A lot of chemicals that are in our everyday life turn out to be endocrine disruptors, which mean that in some way they sabotage and interfere with these chemical messages that fly around inside our body and deliver messages from one part to another part. And all of us are under the orchestration of hormones all the time, but our children are more hormonally directed than the rest of us because hormones guide development itself.
And the research, the growing research, indicated that the parabens were found intact in breast milk, they show up in cord blood, and they show up in breast tumors. And that was enough information for us. And we began the campaign to eliminate parabens.
You know, you can't just tell a woman who's pregnant to stop eating this and start eating this other thing because it's lower or higher in contaminants. This is really a social and political problem, and we need, if any chemical is toxic and known to accumulate in umbilical cord, blood, or mother's milk, it really has no place in our economy.
Avalon was sold about at the end, just at the very beginning of January of 2007 to Hanes Celestial. Over 3 years, we have increased the value of Avalon from an initial valuation of some $30 million to $120 million. And I would say a lot of that has to do with the establishment of our standards and our values.
Businesses owe it to themselves and their shareholders to identify the chemicals in their products and their hazards. A failure to know can jeopardize supply chains, markets, and brands. By contrast, forward-looking companies are finding that green chemistry is good for the bottom line.